Sluggish economic growth is likely to restrict global oil demand for the rest of this year and next, so says the International Energy Agency. Let's get to David Fife, head of the Oil Markets Division at the IEA. Morning to you, David. Given the data out of China just this week, how much worse is the demand picture going to look several months from now?
Very good question. Our view, however, I think is that Chinese oil demand growth may have sort of hit a low water mark, if you like. We've fed through some weaker economic assumptions in our projections this month. We've got Chinese GDP growth around about 8%. I think there are signs that the Chinese government will take measures to keep growth from dropping below a sort of 7.5% to 8% band. And for us, therefore, there's about 250,000 barrels a day of inherent growth in Chinese oil demand. So, of course, it could go lower if unexpected things happen, but we're not planning to curb the forecast any further.
Are you, David, surprised by the firmness of the price? We're back above 110.
I mean, I think as has been the case for many months now, we're seeing prices oscillating around with the sort of envelope effect, which weakening macroeconomic conditions, which provide a ceiling, and what are still a number of geopolitical issues swirling around, not just Iran, but signs of issues in terms of northern Iraq, Nigeria, Libya, where production recovery seems to have stalled. So you've got that sort of trade-off between those two factors, which is causing prices to oscillate around as they are.
I mean, you say global oil supply grew 0.3. What does the supply outlook look like, and do we expect that to come off? Our view is that although there's been a series of issues over the last 18 months, we think of Libya, we think of Iran now, and we think of a fairly chunky series of non-OPEC supply disruptions. Nonetheless, we've got a non-OPEC supply growing fairly steadily, particularly from North America and light tight oil in that region. So we think looking forward over the next 18 months, the market in our base case scenario looks reasonably well supplied. But of course, we've got the potential for, as I said, unpleasant economic surprises on the one hand, or geopolitical issues on the other. But do you expect the West to step up sanctions on Iran, as it seems their exports are beginning to pick up now?
Well, as we highlight in the report, preliminary data for July shows consumers or customers taking about 1 million barrels per day of Iranian crude. That's about 1.5 million off prevailing levels from last year. So I think the sanctions seem to have been fairly successful in that sense. We may see a bit of a bounce because some of the shipping insurance issues have been dealt with. Our view is that Iran will still struggle to sell about 1 million barrels per day in the second half of this year.
Can the world do without Iranian oil altogether, do you think?
Well, so far, Saudi Arabia and other producers have stepped in and helped fill the gap. And we've said we're seeing growth, particularly from the Americas, in terms of non-OPEC producers. So I think if the gap is about 1 million or so, then the system can deal with it. If the gap is significantly greater than 1 million, then I think we'd have to perhaps adjust our view.
All right. Thanks as always, David. David Fife from the IEA. Do keep up with us on Twitter at Reuters Insider, and join us throughout the week for Reuters Today, a snapshot of all the latest world news and market headlines. I'm Axel Threlfall. This is Reuters.